So let's get into it. Here's the trades that are set up. So I took this first long trade right here. So we had a signal long on it. Okay, let me turn the cursor off. All right, our crosshairs. So I took this first trade long with my stop here in the middle. Okay, that's where my stop was, right in the middle. And that stop was hit. Okay, so we'll put a stop marker there. So basically took it long, had the stop there. As you can see, it pulled back. Stop was triggered. I lost 220. Okay. Then it quickly made its way and closed beyond the low. This red area is a 4-hour support and resistance level. The one up here is a 4-hour resistance level as well. Those are marked on the 4-hour chart. We need to be aware of those. And that's where we were stuck yesterday, Nasdaq. Nasdaq was stuck between the two and did not break out. It was hanging out basically between both those 4-hour levels. So when it came down and closed here, I went ahead and did the same thing. I took the sell. I did 4 contracts on both these. So 4 contracts long here. It pulled back and stopped me out. 4 contracts short here. And like I said, it went to level 1. I decided not to close. We had a strong bearish candle that closed past level 1. That's a big candle right there because it was after a pullback. It closed here, got in, it pulled back to the opening range low, and then gave a strong bearish candle. So I went ahead and took that trade and or held that trade. And I held it on when it hit level 2 here. That's when I closed out 3 contracts. So again, I went in with 4 each way. So 4 long, stopped out negative 220. 4 short, I closed 3 here and captured 282. So that made up for this. Now I was positive 62. Not much, but positive 62. So again, as I always cover this, I always say, how much do you need per day? And again, if you need $4,000 to live on, I know I use that example a lot because I think most people, I know here where we're at with my construction background, most people right now, they might make about 20 to 25 an hour in the construction industry. That's not union or anything else. That's just general. You hire somebody, typically you're starting them out between 17 and 20. So 20 is a decent wage here. So 20 an hour, 8 hours a day gets you 160 a day, 160 a day. Okay. And you're working 8 hours. So that's less than $4,000 a month. So trading, if you're looking for $4,000 a month to supplement that income, maybe get out of that job, that's $200 a trading day. And I basically made that back here, but was still not up. I was only up $62. Okay. Now here's where it kind of went wrong for me because I was out driving. Okay. So again, when it did close out partial, I moved my stop to a break even. So my stop was down in here at a break even level. Okay. Once it hit that level, once I closed partial. Now, once it moves and closes past a level, I will move my stop. So if I'm trailing 1 level back, once it closes past a level, I'm going to move my stop here, which is what I did. Okay, 1 level back. If I'm 2 levels back, I'd still be at break even. I don't move my stop when it touches a line. So you'll see here, price came down and basically touched level 3. That's not the time I move my stop, because a lot of times then it'll do what it did here and pull back and wick and take you out. Okay. If I would have moved my stop down here, you'll see that it was almost wicked out. So what I do is I wait for a candle to close past the line, which is this one here. This red bearish candle here closed past level 3. Then I move my stop to level 2. Okay. So my stop was at level 2. Almost still taken out. Okay. It pulled back up to do what? Well, it pulled back up to test this high. Okay, so still almost taken out. Then we had a long bearish 3-minute candle that went back through 3, on through 4, and closed past 5. Okay, if I was sitting here watching my computer, because again, I was out running around and coming back from the doctor. So I'm out on the highway. I'm not trading while I'm driving down the highway. If I have my screen open and want to do anything on the road, I do pull over. I'm just, I got time, so I'll pull over the side of the road. And today I pulled over a couple towns over, pulled over in front of the post office to finally adjust my trade. Okay, so again, long bearish candle. And on this one, since it closed past 5, my stop would have been, now keep in mind, my stop was here, okay? And I was out running around, so I missed the chance to move my stop. If I had, when it closed past level 5, okay, right here, I would have moved my stop to level 4. My stop would have been at level 4, okay? Then when this candle here closed past level 6, I would have moved my stop to level 5, and then I would have been taken out here. So that's where I would have been taken out, okay? Had I been here monitoring my trade. That would have been the exit, okay? Here's where I got taken out. My stop was here at level 4. So I had a chance to move my stop, so it pulled back. I got home, and it had pulled back. I was still in because, again, my stop is over here, at level 2. It gave me a chance to actually capture some of the profit I missed. Not a lot, but it come down here and closed past level 4. So what did I do? Move my stop 1, okay? It came down, closed past level 5. I'm getting excited. I'm thinking, cool, it's going to back to level 6, and I'm going to be able to move my stop anyways to level 5. That's what I'm hoping. I'm hoping these two big red candles. I'm like, man, another big red candle like that close past 6. I'm going to move to 5. Boom, we're golden. We're getting out the same point where I missed getting out here while I was driving around. Well, that didn't happen. As you can see, it pulled back and stopped me out. So I got 221 on the runner. And guys, that's why I like to leave a runner on, because the runner basically profited extra, okay, from level here where I closed out partial to over here. That's extra right there, okay? As you can see, I had one contract on, and I got $211. I just pulled the measurement tool from right here where I closed partial, okay, at the 282. I closed 3 and got 282. And let's see, what is that, guys? So we'll go ahead and figure that up. So we had 282, and we're going to divide that by 3. So it's $94 per contract. So when I closed out 3 here, I got $94 per contract. If I would have just closed out all 4, I would have got another $94, okay, plus the 282. So I would have had $376. Now subtract the 220 that I lost earlier here, then I would have ended up with a $156 day. Now, there's a big difference. There's an extra $120 in there, roughly, 118, something like that. So I got an extra $118 basically by doing what I did, by managing my stop what it is. So the 211 minus what I say, 94, $117, not 118. So by moving my stop, by leaving the runner on, I got an extra $117 than if I would have closed all. So if I'd have closed off all 4, I'd have been $117 less than this, okay, on the day. So again, by leaving runners on, you typically will capture more profit if things run, okay? Now, I would have had even more profit had it hit here, okay? So my runner, let's see if I can pull that. if I would have been watching from where I closed here and been at the computer, again, I would have had my stop at level 5 when it closed past level 6. So that would have been 332. So had I been here for this move down and it closing past level 6 and trailing my stop one level back 5, I would have got 332 on the runner itself. Okay, plus the 282. Wait a minute, what do we got? So 332 plus the 282. You know, help if I hit the right buttons here. So we're looking at 614 on the day minus 220. So I would have been at 394 on the day, basically, instead of the 273 on the day, which is about an extra $121. So I'd have had an extra $121 if I would have been here and managed the stop the way I would have wanted to manage it. It just so happens it wasn't in the stars for me, it wasn't in my plan, whatever. That was my plan. However, I was driving down the highway. So I didn't have a chance to do that. So overall, not a bad day, because again, most people, if you're looking for that 200 a day, 4,000 a month, that's today. Okay, yesterday was kind of tough on this, but that's today. So what I do want to cover is this indicator is this one I've mentioned to you guys. It's by Lux Algo, and let's look over here. It's Lux Algo, Orb, and Targets. I think it's what you want to look up. Okay, and it has the targets come up for you. You can turn on historic charts for back testing. I always leave it off when I'm forward testing or forward trading. Set it up however you want. If you want the first 15 minutes, I have the first half hour, 9:30 to 10. Okay, and then here's what I want to show you. So you can signal. We want the signals here, the triangles to pop up. So we want to leave that on. If you untick that, the signals go away. So that's the whole point of the thing, is to know when you get signals. You can also shut off the target. So that's kind of what I wanted to go over. You can use the targets on the indicator if you want. Okay, or I can shut them off and use the profit target tool if you'd rather use that. And you're going to mark it from the stop level to your entry level. Okay, is how you're going to do that. All right, so I've already got it set up here. Let me see if it'll go back to that. I had it set up, so it should automatically give it to us. It's going to move my stop back. Would have been better to just redraw the thing. We're not going to do that. We're just going to shut it off. Let me take us back to where it was, guys. All right, we'll leave that back where it was. We'll just redraw it. So we're going to go into, we're going to shut that off and then basically take the Fibonacci tool that we've modified. There again, there's our entry, that red candle. And you're going to, we've changed this. So since we've modified it so where it actually shows 1-to-1 everything. So you need to draw, from now on, draw it from the entry price back to your stop loss. Okay, entry price to stop loss. And then that's going to project 1-to-1, 2-to-1. So there's the difference in it, in the two, is I pulled partial here on this because I didn't put the fib tool with my profit targets on there on the chart. Okay, I just used the out of the box, this one with profit targets. Okay, so again, there is a difference because this one, if we put the targets back on there, you'll notice a difference. It goes from, instead of going where we draw the tool from our stop to our entry price, which is here, okay? Making sure I got it drawn right because I'm getting mixed up in this zone here. Let me take that out of the way. So again, we're using the profit target tool from the stop entry to the entry price. That's going to project you 1-to-1, 2-to-1, 3-to-1, 4-to-1, and so forth. So in that case, if you're using that tool, it closed past level 5, you would have still moved your stop to level 4 which is back here. So it's the same as what I did. As you'll notice, I would have moved to 5. So on the ORB strategy tool, close past level 6, would have moved the stop to level 5. Okay. If you didn't use that and you used the profit target tool, then it closed here. So it closed past level 5. You're going to move your stop to level 4, which is here. Same stop placement. Same stop placement at this level. Okay. So that's the difference in the two. You have to decide what you want to use. If you want to just, use the ORB, take profits, or you want to take those off, and use the profit target tool. Neither one's right or wrong. It's just going to be a personal preference. All right, so let me take this back off. I want to clean the charts. Where's my stops? Because now what we're going to do is I'm not going to look at the 15-minute. Guys, if you're looking at the I'll adjust it to the 15-minute. And I took a loss here. You'd have just taken a loss earlier. So if you go and adjust this to the first 15 minutes, which would be 9:45, then you'll see it adjusts, right? And you would have had a buy signal here, and you would have taken a loss. It triggered another buy signal. If you didn't pull partial there, another loss. That's tight. So if you got in on that signal, go into profit target 1, there's hardly anything there. So most people would be waiting for it to go past that toward level 2, and you would have not got that. It would have been 2 losses. So again, during my back testing, I've just seen that leave it on 10 o'clock. Wait the first half hour. You take less losses if you do that. So now what we want to do is look at all 4. The power trade indicator was red on the higher time frame, except for right here. Okay, same as that signal on this push up. It turned green for a minute, went back to red. Okay. So we would have been holding. Here is, and Russell's still cranking. I mean, it's been the winner today. So here's all 4 of them together. So as we look at all 4, and they're all set up to where they're 9:30 to 10 o'clock. Okay, that first half hour. And as we want to look at all 4 of them together, we want to see what went where, what went the furthest, what broke out and ran, okay? What would have been the easiest to manage? What would have been the best thing to be in? And as I look at all these, I think I did well on Nasdaq. Nasdaq did fine. Managing it did fine. It went to level 6, closed past 6. You'd have been closed out at 5. Now, because I wasn't there, I got closed out at 4. I think that's still great on the day. Okay. You would still, as far as S&P's total chop. You would have had 2 losses if you took both these signals. Okay. So, and we're past noon. So if you took the redemption trade, you'd be in this one right here. Long, stop halfway. You'd still be in it right now, but it hasn't gone anywhere. The red zone is a 4-hour zone, so you have to keep that in mind. And I need to go back and put this other one back on here later on Nasdaq. So you have to keep in mind that red zone is a 4-hour zone that tends to be respected. So we look at Dow and we look at Russell. Those were the 2 runners. And you'll see a lot of people. You guys know that I don't like to trade just one instrument. I don't like putting all my eggs in one basket for the day. And this is why. If I would have chosen to trade S&P, I'd have a losing day so far. Okay? I went with Nasdaq. I did only trade one thing today. Why did I do that? Because I was out running around. Okay? It's kind of hard to run 4 different instruments on your phone. And especially if you're out running around and you can't. I had to go in the knee doctor. So then I had to go get x-rayed. Then I had to go back in the room. Then other people are coming in, the nurses, then the doctor, then the nurse, then the doctor. Take me out for x-rays, bring me back. There's no way I'm managing a trade during that. Okay? That was all before the stock market opened anyways. So I actually got out of there before the stock market opened and sat in my car and then set up to trade the strategy. So, but I wasn't about to trade 4 instruments. So if you would have put one contract on each of these, now that means you can't close partial, okay? But if you would have put one contract on each of these, you would have put a contract long on Nasdaq, okay? You would have went long on Russell. You would have went long on or Russell and long on Dow. You would have went long on S&P. You'd have got stopped out on the 2 trades. Nasdaq, S&P, stopped out. Well, you're still in Russell and Dow. So do you need to go back and trade the other 2? As we can see by the charts, no. You wouldn't need to. You already had a loss on Nasdaq. You had a loss on S&P, but you're in these 2 other ones. So manage them. There's nothing that says you have to get back into these others. Now, if you would have got back in when this signal's short on Nasdaq, well, that would have been another profit runner for you. If you would have got in short on the S&P, that would have been another loss for you. Okay? So there's nothing that says you have to get back in these if you're already in 2 other ones that are running. So again, as we look at the other instruments here, what do I want to do? Not that. Let me just set up a stop marker here. Okay, so let's look at all 4 of them together. I think you can see the charts pretty well. So you would have got in here or got in long. Now, you guys can look at this however you want. I'm not saying to take all of them, but you can. I'm just going to show you the difference in all of them and how we would be managing those. And then, of course, you would have to decide if you're going to try, trading all 4 or just picking 2 instruments and trading 2. And or if you want to still trade just 1 instrument. Okay, I'm not big on trading 1 instrument. So there would be the stops, okay? And I don't think I really need to put I'm not going to put the one on Nasdaq because I already went over Nasdaq. Again, you would have had your stop in the middle. You would have entered long, then stopped out. If I took the second trade and went in short and profited on that. So that made my day. Okay, so again, here would be your stops. You got stopped out. The first trade on S&P, you would have got stopped out. Now, as far as managing the trades on the Russell and Dow, again, you have to decide for yourself if you're going to pull partial at the first level or wait and pull partial at the second level. Everybody's going to be a little different. If you look at these 2 today, you could easily say, again, we're looking backwards. You can easily say, oh, I would have surely I'd have waited till it hit level 2, okay, to pull partial. That worked great on these 2, but look at S&P. So your first loss was on S&P, taking long loss. Your second trade short you'd entered here, it almost went to 1 and pulled back, stop you out. So if you would have closed partial, that would have been a positive trade because you would have moved your stop at least to like the quarter level. At least I would once it gets toward level 1. So as far as managing on these, again, it gets to level 1. When it gets to level 1, no matter what, no matter if I'm closing partial or not, I'm going to move my stop to the quarter stop area. This one doesn't get to level 1 here. Touches level 1 there. You'd move your stop to the quarter stop area. Okay? Once a candle closes past level 1, then it's okay to move to break even. If it's tight, if break even's tight, you may just want to fudge it up a little bit and still leave it a little bit extra room. Okay, like this one, we definitely can move to break even because we got a lot of spread there. Okay, we got a little bit of distance where we don't really have it on Russell. And part of that's just because Russell moves so much. So if I move the chart like this, it closed past level 1. So again, whether you move it to like break even, your entry would be here, or just, better than the quarter stop and just under your entry. It's up to you, but you're minimizing your risk at that point, your open risk for loss. Okay, so let me go back here. So let me just cover under, let's just do Russell real quick first. So we look at Russell. As it went up, it closed past level 2. So we'd move our stop to level 1. Okay. You can call this is not a closed past level 1. The green candle is a bullish candle. It pushed up and hit level 3. Price was moving when the next candle started. But that's a red candle, guys. So price is moving when this one opened. That's why it looks like it opened up a little bit above the line. But that is not price moving past the line and closing above it, right? Because it's bearish. So we don't count that. Comes back down, goes back up, and here we close above level 3. So we'd take our stop and move it to 2. Okay, then it goes up, closes above level 4. You would move your stop to 3, closes above level 5. You're going to move it back. And then here we close, open and close above level 6. And then you'd be right here. So you'd be at level 5 on this, and you'd still be in it. Okay. So from your entry up here, there's what you'd be up. Okay. On the trade. As we look at Dow, same thing. So again, it barely kind of closes above. You might move to break even at that point, but this candle definitely closes above level 1. You would move to break even at that point. This candle closes above level 2. You're going to trail 1 level back. Then we touched level 3. So it has never closed past level 2. So this is where it's up to you. Are you going to move your stop a little aggressive and clear up here to level 2 and say, I like that. That's good on the day. Or are you going to give it a little room? And instead of moving it to level 2, just move it up under this low right here. Give it that room, so if it pulls back to test that level as support and resistance, or support in this case, and bounces, you're still in it. So that's up to you. Where are you going to put your stop? So either way is good profit on the day. Again, you're here on the signal. This is what we'd be up right now. Not as much as not as much as actually the Dow on there. Okay. So what looks like a great move. So again, I just wanted to cover the differences. I'll get this uploaded real quick. And again, did okay on Nasdaq. Yesterday was a profitable day. Not much, but that's because of where I took a trade. I took a trade in the middle of the box because it was between 2 red zones, 2 4-hour zones, and it was going sideways. So I only profited because of what I did there. We didn't get a chance to take a trade long or short on Nasdaq yesterday. It didn't break out. Okay, so today we had things break out. So great on the day. And then we'll see how tomorrow is. So again, I'm looking to take trades in the morning. Around 7 o'clock I start looking, and I'm using this right here. I'm using the Power Trader Pro indicator. I'm looking for buy and sell signals off of it. And we would actually trade just during the market time frame is what we're doing on it. Okay, so I have the buy and sell on there, and then we're looking to trade when that market opens. We don't get another buy signal, but we're going to hold. As long as the bottom line down here stays green, then that's what we're going to keep holding. So again, bottom line staying green, we're going to hold. This one, back and forth on S&P, and that's what we had, back and forth. Nasdaq, I'm holding. So I was holding because the bottom has stayed red. The other two were red too in here and stayed red for that whole downward move. So this whole first move down, where again, if I was home, I would have been trailing. It was all of them. All 3 stayed red. Okay. All 3 of them stayed red on that from my sell signal up here on down. So we had the sell signal. Everything stayed red. The middle two are still red for holding short. We've just had a healthy pullback. All right. So that's what I want to cover. I just wanted to go over that. Hope you enjoy it. And we'll be back tomorrow. Thanks and have a good day. Safe trading.